Good day everyone. We will be discussing the last chapter of part 3 of the book, which is the stock valuation. In this chapter, we will learn about the other major source of financing for corporations. Common stock valuation. So as with any other financial asset, stock valuation involves finding the present value of future cash flows. However, it says that a share of common stock is more difficult to value in practice than a bond for at least three reasons. First, with common stock, not even the promised cash flows are known in advance. So just like dividends, the dividends received by common stockholders are not fixed, and some corporations do not pay any dividends at all, in contrast to bondholders who receive guaranteed interest payment on a regular basis. Second, the life of the investment is essentially forever because common stock has no maturity, unlike the bondholders that stated the maturity of their bonds. Third, there is no way to easily observe the rate of return that the market requires, di katulad sa bonds na they are paid a fixed rate of return based on the bond's coupon rate. So because each turn of events might make a company's earning unpredictable, valuing its share of common stock is a much more difficult procedure. However, there are cases in which we can come up with the present value of future cash flows for a share of stock and thus determine its value. So, i-discuss ko later kung ano yung mga cases na yon. Cash flows. So, let's say you are considering buying a share of stock today. Then you expect to be able to sell that share for $70 in 1 year. And also, you expect to receive a $10 per share dividend at the end of the year. Return on investment is 25%, so the company typically generates 25% return on its money every year. So the question is, what is the most you would pay for the stock? In short, what is the value of one share stock to you? So if you buy the stock today and ibebenta mo ito at the end of the year, magkakaroon ka ng $80 in cash divided by 1 plus a 25% discount rate, so the present value of the stock will be $64. So it implies that if a share of stock is sold for more than $64, you should not buy it since hindi ganun dapat kataas yung value niya. So yung share of stock na yun is overpriced. However, if shares are less than $64 per share, you should buy them since they are a great deal. Generally, the price today of a share of stock is the present value of all of its future dividends. How many future dividends are there? There can be an infinite number of endless stream of future dividends. So this simply means na we still can't compute a value for the stock kasi kailangan pa natin i-estimate yung infinite number of dividends and then discount them all. So hindi talaga kaya. So because we can possibly predict all future dividends, we will look at some few special cases with simplified assumptions that will allow us to calculate today's stock price. The three special cases of dividend patterns are: first is the dividend has a zero growth rate. That's when the firm will pay the constant dividend forever. This is basically preferred stock since constant dividend yung share of common stock. Second, the dividend grows at a constant rate. So as we all know, most businesses are growing and producing more money, allowing them to increase their dividend per share on a regular basis. The third is the dividend grows at a constant rate after some length of time, or which we call a non-constant growth dividend. So dividends will grow but not at the constant rate. So para mas lalong maintindihan, I'll go over each case one by one. Let's start with the first case, which is a constant dividend or zero growth dividend. This first case is much like a share of preferred stock. So sa chapter 6, which is the discounted cash flow valuation, na-discuss dun sa example 6.7 na yung dividend on a share of preferred stock has zero growth, so constant lang through time. So with regard to a share of common stock, this implies that you will receive the same dividends each year. So let's say meron kang 5 dividend per share. So after 1 year, another $5. After 2 years, another $5 na naman. After 3 years, ganun ulit and so on. So for the rest of your life, you will receive the same dividend. Therefore, the value of the stock is the present value of all its future dividends, since there are infinite number of future dividends. And when dividends appear to be perpetual or infinite, the stock can be viewed as an ordinary perpetuity. So cash flow equal to D or dividend every period divided by the rate of return. So for example, suppose Paradise Prototyping Company has a policy of paying a $10 per share dividend every year. If this policy is to be continued indefinitely, what is the value of a share of stock if the required return is 20%? So the stock in this case is an ordinary perpetuity since infinite in dividends. So the stock is worth $50 per share. Let's take a look at the second case, which is referred to as a constant growth dividends. Assume we know that a company's dividend will continue to grow at a constant rate forever. So this is called a growing perpetuity, which is the discussed na from the discussion in chapter 6. So the dividend in 1 year would be equal to today's dividend which was just paid, multiplied by 1 plus t where g is the annual percentage growth in the dividend amount. So simply repeat the process lang in the second, third, fourth, and future years. So the question now, what method do we use to calculate the present value or current price of a share of stock with growing dividends? So we will use this method known as the dividend growth model. To simplify things, let's say the dividend today is $2.30, the rate of return is 13%, and the dividend growth rate is 5%. Using the method above, the price per share is $13.19. So ang nagiging problema lang dito sa non-constant growth is kapag yung dividends are not zero for the first few years. For example, dun sa module, na-estimate mo yung dividend for the next 3 years. As a result, the first year's dividend should be $1, the second year should be $2, and the third year should be $2.50. After the third year, the dividend will grow at a constant rate of 5% per year. There is a required return of 10%. What is the value of the stock today? So lagi natin tatandaan na ang value ng stock today is the present value of all the future dividends. So in order for us to get the present value, we must first calculate the present value of the stock price 3 years from now. So after 3 years, the price will be $52.50. Finally, malalaman na rin natin ang value of the stock today. So i-add lang natin yung first 3 expected dividends natin dito sa present value of the stock in 3 years. So ayan, double check nyo yan. Ang makukuha nyo is $43.88. So ito yung value ng stock today.
Supernormal growth. From the word itself, super, normal. Higit sa normal. Higit sa normal yung paglago ng value ng stock for a year or more. Pero, hindi ito masusustain long term dahil hindi mawawala ang competition sa market. Proceed tayo sa problem para maging mas malinaw. In this problem, we have the given values for company A. Supernormal growth rate is 30% for the first 3 years, and then constant growth rate of 10% after the first 3 years, and will remain indefinitely. Total dividends just paid 50,000 pesos, and required return is 20%. The question is, what is the total value of the stock today? For year 1, we have 50,000 times 1.3 since 30% ang growth rate natin sa first 3 years. The total dividends for year 1 would be 65,000. For year 2, we have 65,000 times 1.3 to get 84,500. For year 3, we have 84,500 times 1.3 and the answer is 109,850. We can now get the value of the stock at year 3 by using the formula. We will use the constant growth rate dahil yung time 3 is yung start ng constant growth. Next, substitute for the given. Then, we will get 1,208,350. Ito yung value ng stock at time 3. To get the value of the stock today, we will add the present value nung nakuha nating amount sa time 3 and the present value of the total dividends. The formula is on the screen. Substitute the values mula sa mga sagot na nakuha natin kanina. Then simplify each fractions. Then add 54,167 plus 58,681 plus 63,571 plus 699,277 The total value of the stock today is 875,696. Let's proceed to the next topic. Two-stage growth. From the word itself, two-stage. May dalawang stage yung growth rate. Yung unang rate hanggang sa kung ilang taon yung sinabi. And another rate naman sa mga kasunod pang taon at magpapatuloy. Yung formula sa itaas ay para alamin ang value ng stock today or P sub 0. Yung nasa ibaba naman is to get the value of the stock at the start of second stage using the formula for P sub T, wherein the first stage rate would be G sub 1 and the second would be G sub 2. Let's have an illustration. Company B has this information. Growth rate of 20% for the next 5 years and 4% growth rate after forever. Required return is 10%. Dividend just paid was 2 pesos. The question is, what is the value of the stock today? So first, we will find the value of the stock at the start of the second stage, which is 5 years from now. Substitute the values to the formula for the second stage. Then use the calculator to find the value of P sub 5. The value of the stock 5 years from now is 86.26 pesos. And now, we will use the formula for finding the value of the stock today. To get the value of D sub 1, we have to grow D sub 0 by 20% by multiplying to 1.20. So, 2 times 1.20. Substitute the values and use calculator to solve for the answer. And we will get 66.64 pesos for the value of the stock today. Let's move on. What if ang hinahanap naman natin is the required return? So, mula sa main formula, na-derive ito para sa pagkuha ng required return, wherein D sub 1 over P sub 0 is called the dividend yield. Ito yung expected cash dividend ng stock divided by the current price ng stock. Yung G naman sa formula is the growth rate. At dahil ang dividend growth rate ay also the rate at which the stock price grows, considered ito bilang capital gains yield. Capital gains yield, ito yung rate kung paano mag-grow ang value ng isang investment. To illustrate, we have an example. Stock is selling at 20 pesos per share. The next dividend will be 1 peso per share. Growth rate is 10%. The question is, what return does this stock offer? So, we have the formula for required return. Dividend yield plus capital gains yield. So, required return is equal to 1 over 20 plus 10%. 5% plus 10% equals 15%. Therefore, this stock has an expected return of 15%.
Some features of common and preferred stock. We already know that common stock itself is defined as a certificate that indicates ownership in a corporation. Ng common stockholder, sila yung mga nagmamay-ari ng isang firm. Example, kapag bumili ka ng stock sa isang company, katumbas nun yung pagbili mo rin sa part ng company at magkakaroon ka ng ownership rights na proportion sa share mo sa company. But when it comes to voting rights, most often, common stockholder are the only security holder with the vote. So, common shareholders are entitled to elect the board of directors and approve any change in the corporate charter. Dahil nagkakaroon ng annual meeting para sa board of directors, na pagdating sa botohan, hindi ito katulad ng political democracy, na one head, one vote, kundi one share, one vote. Kaya kung nagmamay-ari ka ng 300 shares sa isang company, meron kang equivalent na 300 votes. Ngayon, kailangan naman natin alamin kung paano botohan ang mangyayari sa board of directors. Kung cumulatively voting or straight voting. Doon muna tayo sa cumulatively voting. Cumulatively voting, individual have one vote per share. Each share entitles to one vote per each director seat. You can allocate any number of votes to a single seat. Example, nagmamay-ari ako ng 200 share, equivalent ng 200 votes. Dito, pwede kong iboto lahat ng shares ko sa iisang director lang. While straight voting, individual have one vote per share. Each share entitles to one vote for each director seat. usually calculated as the number of shares owned or controlled multiplied by the number of directors to be elected. Example, nagmamayari ako ng 200 shares at meron tatlong directors na candidate. So 200 multiplied by 3, total of 600 votes. Kaya pwede akong bumoto ng tig 200. Proxy voting. It is a form of voting whereby some members of a decision-making body may delegate their voting power to other members of the same body to vote in their absence and or to select additional representatives. Alam naman natin na pag sinabing proxy, may nire-represent itong tao. Kaso, ang representative dito ay dapat authorized siya ng shareholders. Classes of stocks. Some firms have more than one class of common stock. Often classes are created with unequal voting rights, and the primary reason for creating dual or multiple classes of stock has to do with the control of the firm. Other rights. The value of share of common stock in corporation is directly related to the general rights of shareholders. In addition to the right to vote for directors, shareholders usually have the following rights. Number 1. The right to share proportionally in dividends paid. 2. The right to share proportionally in assets remaining after liabilities have been paid in liquidation. Last, the right to vote on stockholder matter of great importance such as a merger. Voting is usually done at annual meeting or the special meeting. Preemptive rights. This entitled the common shareholder to maintain a proportionate share of ownership in the firm. Na kapag yung isang shareholder ay currently nagmamayari ng 25% shares, meron siyang right para bumili ng additional share sa bagong i-issued ng company. At ang preemptive rights ay ini-issued through certificate na binibigyan ang shareholders ng option para bumili ng bagong shares sa specific price during some fixed period. Preferred stock features, often referred to as a hybrid security. It has many characteristics of both common stock and bonds. Ang preferred stockholders, generally, wala silang voting rights sa board of directors. At ang cumulative and non-cumulative dividends. Para sa cumulative dividend, the must be paid before and other dividends on any of the issuer other securities. At yung non-cumulative dividends refers to a stock that doesn't pay the investor any dividends that are omitted or unpaid.
What is a stock market? Stock market are where individuals and institutional investors join together to buy and sell shares in a public venue. So dito sa Pilipinas, meron tayong PSE or Philippine Stock Exchange, wherein lahat ng company na gusto magbenta ng shares nila into public will be publicly listed in PSE. And para din sa mga traders and investors na gusto mag-invest. So basically, siya, para siyang palengke, pero ang tinitinda at binibenta is mga shares ng company lang. What is stocks? So stocks are also called shares or equities that are portion of the company. And for example, GFC or Jollibee, let's say meron silang 1,000 shares, and bilhin nila isang share. So you own 1 over 1,000 shares of GFC company. Why companies selling their shares into public? So, pinaka-main reason talaga dito is to raise the funds of the company. So, kapag may funds ang isang kumpanya, makapag-acquire sila ng assets, also the expansion of the company and the price of the stock will increase. So, how do you earn in the stock market? There are two ways to earn in the stock market. First, dividends, and second is yung capital appreciation. So, dividends, so if you're holding a share of a particular company na magandang performance or pamamalakad, and they generate a high revenue for this year. And this year, they decide to give the shareholder a dividends. And yung dividends na yun is nakadepende sa shares na hawak mo sa isang company. Mas maraming shares, mas maraming dividends. So, next sa capital appreciation naman, so you can earn by buying the stocks low, and hihintayin mo yung particular stock na yun na tumaas at saka mo ibebenta. So, parang buy low, sell high. And itong dalawang type ng earnings na to is a passive income. So, how to trade? First, kailangan mo ng broker. Broker is an individual or firm that acts as an intermediary between an investor and a securities exchange. Kumbaga, broker basically a middleman between the companies and investors. Kasi hindi ka pwedeng bumili ng stocks directly sa company. So, nandiyan ang mga broker para sila na yung mag-execute ng trades para sa'yo. So for example, Call Financial, isa siyang online brokerage. Pagkakalam ko pwede kang mag-start din sa halagang 1,000 pesos lang. Makapag-start ka na mag-invest sa stock market dito sa PSA.